Hey ladies and gentlemen, welcome back to another video, and today I'm going to just talk a little bit about the boring style of investment. And what prompted this video is what I wanted to start the video with. And basically what prompted this video is that sometimes I post on my story. By the way, if you don't follow me on Instagram yet, go follow me on Instagram. That's probably where I will be for the remainder of this deployment. I'm moving back into basically open barracks. I'm going to have a lot of roommates. We're going to link arms, sing Kumbaya, and love on each other. We are going to be in very close quarters. So the videos are probably going to slow down for the rest of September. But anyways, that is not the point of the video. The point of the video is somebody asked me, hey, you should make a video about why you are so bullish on Tattooed Chef. And there's kind of two facets to that. Number one would be it doesn't matter. Okay, exactly, it doesn't matter. So what matters most is your savings rate, and what matters most is your propensity to actually like save money, go make money. And the second one is that I will actually get after that. But what I see a lot out there is that it's very popular out there on YouTube to say, you know, 3 stocks to buy for the month of September, or, you know, this, you should buy this stock, but nobody knows what the stock price is going to do. You need to know basically the fundamentals of the business and that boring style of investment. But anyways, let's get right into the video, and I will probably see you guys in another month. I want to kind of push people towards the boring style of investing. And it's basically along the lines of, if you are doing investing, quote unquote, and you're doing it, you're getting excited about it, you're probably doing it wrong, right? If you wake up every day and you're super excited or super worried, or there's a lot of emotion involved, you're probably doing it wrong. So one thing that has really changed my perspective is 2 great articles that I read, and then also just coming into contact with a couple people from what I would call old money. Okay, so we've got a guy out here on the deployment. His name is, I'll leave his name out of it, but basically he's a doctor. He's got a couple generations of his family that's been a doctor. And just talking to him, you don't see these behaviors that we typically see on finance YouTube, right? You don't see these, I'm trading in and out at options, and I'm trying to maximize my small income, or I'm trying to, it's a more matter of fact type of attitude. It's a more conservative type of attitude. It's a more, we just go into ETFs and we build the wealth over time, and we're happy doing what we do type of attitude, right? It's more income focused. It's more savings rate focused, and it's more just focused on, not trying to grow focus overly heavily on trying to grow a little bit. It's more focused on having a lot and not squandering it. So I just wanted to go into a little bit of what I'm doing, right? So I'm going to show you guys some moves that I'm making over here in the markets. And lastly, encourage you guys that if you are, let's say, an ETF investor, or you are a boring company investor, like myself primarily, don't be dissuaded. But what we're doing over here, so let me go into my option plays. One of you guys out there pointed out that I was not, what did I say? I said I was selling a put or something like that. I was selling a call. Okay, so I sold a call against my Altria, Altria shares, and that they should go through for about somewhere between 35 and 39 cents a piece. So that'll be about $39. I'll collect the premium, and I believe that one is that is a December call, so about $13 a month that we're going to make there. That one will be called if Altria goes up to $55. I don't know, or I don't think that Altria will go up to that based on the chart patterns that I'm seeing. If it did go up to that, I'm perfectly willing to sell out at that price. Altria is not a stock that I'm trying to get massive capital gains on. It's one of those income type stocks that if it were to go up there to $55, I would be very happy to sell it at that profit and try to get back in on the investment. So that is a cover call that I sold. Moving over here into the Robinhood portfolio over here, we bought some Tattooed Chef. This thing has been going absolutely beast mode. Let me go down here into the indexes. I always point out the indexes and the Russell 2000. So let's go back 3 months. We see that, let's go on the year. The Russell 2000 has been bouncing off of this 86 to 84, 85 type of range, right? We saw it bouncing over here, right? And this is where I went in and started doing some buying. I saw the Russell at 85. All right, now we're back over here at 91. All right, and we see that we've been seeing a lot of resistance around the 90s over here, 92, 93. All right, so now, as you guys could probably guess, I'm not as excited about buying something like a Tattooed Chef or those other Russell 2000 type stocks, right? So we went in, we bought some Tattoo Chef, some Corsair Gaming. I think that these are underpriced stocks, and these are, get back to the point of the video, these are companies that I can see myself holding really forever, right? These are companies that I have used their products. Like Tattoo Chef, I eat their products all the time. When I was a gamer, Corsair Gaming, I used to use their products. So it's not rocket science, guys. That is the point of this video. So hands-off investing. This is a minority mindset. Definitely sign up for their newsletter if you guys get a chance. But it's basically talking about how you're going to most likely outperform other people if you just trade into ETFs. So let's go down here. There was a couple things that I wanted to share with you guys from this article. And the main one is getting into this question of what is wealth. So to me, wealth is your time, right? Your wealth is your time. So if you're spending a bunch of time, right? You're spending a bunch of time at your job. You're spending a bunch of time on your investments. You're spending a bunch of time on the charts. That is not paying off. It's not paying very good dividends. It's not paying, giving you that return that you want. For me, this type of stuff, right? This type of stuff is just, it's entertainment to me, right? If I didn't want to be entertained by this stuff, I would just go all in ETFs, which there's no problem with that. You will do just fine if you go all in ETFs. And there's plenty of things that you can do tax-wise within ETFs. You can get two similar ETFs, and if you have a down year with that type of ETF, like an S&P 500 ETF, you could sell one and buy the other, things like that. There's a lot of strategies that you can go into. You could go into certain option strategies, get as complicated as you want to with it. But anyways, passive ETFs is a great strategy for you if you don't want to spend a lot of time picking stocks, if you want to hold your assets for a long time and you want to keep your strategy simple. Another benefit of keeping your strategy simple is that you can spend more time on income generating activities, right? So if you're spending all of your time trying to generate this income, let's say that instead of generating a 50% return on 50K, let's say that you generate some return on your time, right? And you make $150,000 to put into the market, right? Obviously, you're doing better in the latter situation. And the last thing in here, I just wanted to show you guys some of these things. This is from a Bigger Pockets article. Let me click on this to show you guys which one it is. It's basically it's about boring investing, right? It's called Real Estate Investing Can Be Boring, and that is a good thing, right? And like I said before, if you're having fun while you're doing your investing, you're probably doing the wrong thing. You might as well just go play roulette. I was about to say Russian roulette. Don't do that. Go play roulette at Vegas. But anyways, here are some suggestions from his real estate experience, this guy writing this article. He's talking about single-family homes with long-term tenants, right? Instead of, let's say, Airbnb or multifamilies or all this other stuff. Rent-to-own tenants who do their own maintenance. Passive investments with a trusted lender or direct loans to flippers. Passive investments through a proven syndicator like Grant Cardone. I'm just kidding. Anyway, passive investments in a diversified real estate fund, right? So that could be something like Fundrise or something that is very boring. You don't have a lot of control over. So all that to say, it's all about temperament. It's all about income. It's all about the long game here. So one more thing before we go, and that is, what is actual freedom, right? So down here it's talking about freedom from actually trading hours for dollars, okay? So basically getting your time back. Freedom from worrying about the price of your options, crypto, all that stuff. You're not worried about that. Freedom from cleaning toilets, tenant trash, freedom to use your time to make a difference in the world, and freedom from agonizing over every financial decision, right? If you've got all this, like if you're over leveraged and you've got all these different risky options trades going on, you've got all these high growth, high flying stocks, you're not really free. Your mind is not free to go actually live life, right? Because that is the point of investing, is to free up your time and free up your mind so that you can go and you can live life. So hopefully you guys got some value out of this. And I'm not bashing anybody who gets entertainment out of, being deep in the investment space, because I'm one of those people. But let's not chastise the boring people who are getting these boring returns, because if you look at old money, that's what they're doing, right? They're getting these boring returns. A lot of them are buying real estate all cash. They're not doing this leverage. They're not doing a lot of the things that we see when we're trying to get first generation rich. So hopefully you guys got some value out of this, and I will see you guys in the next video.